For more on the future of Netflix, we're joined this morning by Porter Bibb, managing partner at Mediatech Capital Partners. Porter, great to have you back here on Bloomberg.
Good to be here.
What's the future of Netflix? Sounds like, it's going to be more expensive for them to do their business going forward.
Without question, yes. But you have to look at Netflix today and then tomorrow. Today, they report quarterly earnings on Wednesday. They're going to have a blowout quarter. They had a huge new subscriber addition in the Christmas holiday season. They're probably going to come in somewhere around 21, 22 million subscribers. That puts them ahead of Comcast and Time Warner, any of the cable companies in terms of critical mass. The problem that the company faces, though, is the cost of content that was just mentioned, and it's going to get more and more expensive. So they will have a really good quarter as a stock, probably looking very, very good for the next short term. But they're not going to be able to last as an independent.
Because I'm looking what they're paying more and more for content. I mean, that's what it's all about. Can they pass it along to consumers and so on?
Well, obviously, the $7.99 streaming fee per month is going to have to go up. But the real issue is they don't have billions of dollars to buy content. They represent right now found money for the studios because the DVD business is shrinking, not just Netflix's, but the whole DVD market is going away. And that was 45% of the profits of the studios. Probably what's going to happen is Netflix is looking for a parent. A deep-pocketed parent, and the real issue is...
So it's a takeover target. You've talked about this before.
Yeah, so the real issue is who's going to benefit from having 20, 25 million subscribers? Well, you look at Verizon with Fios, you look at AT&T, you look at Yahoo. There are a whole slew of people who could benefit by owning this critical mass of distribution membership. And the cable companies are nervous right now because Netflix is a game changer.
So you talked about Netflix being a takeover target. No doubt about it. That's what's got to happen.
Well, you're skating on thin ice with Netflix as an investor. It's going to have a blowout quarter, as I said, when they report on Wednesday. They're going to go well over $600 million in terms of revenue and beat the street 71 cents per share earnings. The problem is over 30% of the shares, the float is shorted right now. And that's because the street and the investors don't know what's going to happen. How are they going to be able to continue to buy content?
Porter, look into your crystal ball. I mean, what do you see in terms of streaming movies and streaming content? What is the future?
Well, streaming is it. Netflix changed the game. You don't have video on demand anymore. You don't have to depend on your cable company and the tiered packages that they're offering. You can get any movie. Netflix has 20,000 films and television shows for streaming now, and 100,000 soon because of their cache of DVD films that they're moving into the streaming sector. So you can get it instantly, and that's what people want now. They want it on their iPhones, on their iPads, and on their television sets.
So they created the model, and they've done well up to this point, but they're not going to be the major player going forward.
I don't think that they can afford to stay in the game as a standalone for the simple reason that everybody is pointing out. They're going to have to pay through the nose for content.
Yeah, it is all about content. Porter, good to get some time with you.
Great to be here.
Porter Bibb joining us here on In the Loop.